Everything about XRP and the whole crypto market could change tomorrow. The day began with some important big picture news. The first figures on jobless claims just came in. The real number was 208, while the predicted number was 213 and the previous number was 199. This means that the number of job losses is still less than what was expected. The market thought that fewer jobless claims meant the job market was still strong, which is exactly what they meant. Almost all risky assets went down in value as soon as this info came out. That response was interesting because good job numbers can leave rate cuts off for a while, and the market doesn't like uncertainty when it comes to cash flow. The price of XRP moved along with the market. The price of XRP fell sharply, all the way down to around 2.06 before it bounced back up. The price of XRP is around 2.13 at the moment. We did briefly lose the 13 EMA and the 48 EMA on the 4-hour chart, which is a sign of short-term weakness. When you look at the daily picture, though, you can see that something important took place. And we did touch the crossover zone and print a buy alert, and price went down, hit that level, and then bounced back up. That's a very important technical area, which is one reason why tomorrow might be so important. Also, it's important to know that most people only look at price at this point. They do not look at where they are, how they are set up, or what is next. That's when planning is more important than guessing, which is why I quickly want to talk about the 100X Club. This is where we focus on giving you weekly stock alerts on stocks that could go up by 100X, crypto insider alerts, and easy methods that will help you think and act like the top 1%. To become a millionaire, you need to think like one, get in early, learn the 100 stock method, and know how to grow your money in a smart way over time. There are clear methods that can help you build real wealth that lasts for generations and 100 times your wealth over time. It's in the saved comment if that sounds like something you want to see. That being said, let's go back to what's going on because things are becoming very interesting. The first XRP spot trade pair has gone live on Hyperliquid, which is one of the biggest news stories today. Don't skip over this. It's important. Flare has finally added FXRP for spot trading on Hyperliquid. This is the first time that XRP has ever been available for spot trading on the platform. It's not just another listing. This is another way that XRP can be used in the real world. When XRP is added to new trading settings, especially spot markets, it makes it easier for more people to use, trade, and do business with. This is another step toward making it easier to use, trade, and settle XRP. Liquidity is like air for markets. Even though these things don't change prices right away, they do over time, especially when funding cycles change. Now let's talk about something that I think isn't getting much attention but could become a big deal. It is said that Amazon Web Services and Ripple are working together to improve XRPL. It is said that AWS is exporting Amazon Bedrock AI powers to the XRP ledger. It would only take 2 to 3 minutes to look over XRPL system logs instead of days if this connection is fully put in place. Take a moment to think about that. Monitoring, diagnosing, and system analysis are some of the most difficult parts of running a large-scale blockchain system. Transaction speed isn't one of the main problems. When something goes wrong or performance needs to be checked, delays cost money and make people take longer to adopt the new idea. If XRPL can cut the time it takes to analyze system logs from days to minutes, that's a huge improvement in speed. With this change, the XRP ledger might be easier to manage, faster to grow, and more appealing to business and government users. Getting rid of a backlog is something that institutions care about a lot, but most people don't. When diagnostics are done faster, reaction times are faster, uptime is better, and people have more faith in the system. This is how infrastructure is built, slowly, quietly, and then all at once. We're going to switch gears for a moment and talk about risk. I always tell you the good, the bad, and the ugly. We've already talked about Zcash. Recently, Zcash dropped almost 20% in just 4 hours after it was reported that some members of their core development team quit because of disagreements within the team. Behind the scenes, there was a lot of fighting and the market responded right away. The price dropped, people lost faith, but then, surprisingly, it began to rise again. Zcash went down to about 380 and then came back up to about 426. I don't bring this up to scare people, I do so to be honest. Could this happen to any project? Yes. Teams fight, bosses change, and disagreements within the company happen all the time, even on big projects. No project is safe. Ripple is part of that. Just so we're clear, there are no signs that this is happening at Ripple right now. But as an investor, you should always keep in mind that team unity and good leadership are important. This is why diversification, position size, and knowledge are so important. You don't just marry any object. You stay up to date. You deal with risk. You can change things. Now that we look at XRP, we see a mix of short-term instability, strong technical levels, infrastructure growth, and utility growth. At the same time, tomorrow is going to be a time when the whole crypto market, not just XRP, could become very volatile. The markets don't just move around. They go back and forth between predictions, liquidity events, and catalysts. Things get interesting when time, technicals, and fundamentals all start to come together. As long as XRP stays above important daily marks and falls below short-term EMAs, the market is not sure what to do. The number of jobless claims shows that the economy as a whole is still tight. The news about infrastructure tells us that long-term planning is still getting better. And the growth of spot trade shows that liquidity is slowly rising. It might not be just another day tomorrow. It could mean making a choice. That choice will either continue things as they are, bring them together, or cause another shakeup. The stage is being set by this market. Long-term winners are those who know what's going on before everyone else. Several things are changing at the same time. And markets tend to feel a little uneasy when a lot of risk factors come together. What's going on in Iran is one of the most worrying things going on right now. Several news sources say that access to the internet is down, contacts are limited, and very little information is leaving the country. When communication stops, it generally means that things are unstable inside or that things are getting ready to get worse. Besides that, the U.S. has been sending signals that it might join in. There have been hints from officials that the U.S. might join the party. Any direct participation would make geopolitical tensions rise right away. And in the past, markets have not liked the unpredictability that comes with war. When things get tense in the Middle East, risky investments like crypto tend to sell off first. There's one more point of view to think about, which we've already covered in other films. Crypto mining and crypto hoarding are known to happen in Iran. There are a number of ways for a government that is under a lot of pressure to get cash. Large holders could use derivatives or spot markets to hedge, short, or sell their shares, but this is just a guess. It's not likely that this will happen, but it's also not impossible. Even the thought that big players might be moving is enough to make markets volatile when they feel weak. While all of that is important, the most important event on the calendar takes place tomorrow and has nothing to do with crypto. The U.S. Supreme Court is likely to make a ruling about tariffs put in place by Trump. The markets, liquidity, and investor sentiment could all be affected by this move in big ways. Based on what we know now, there is a 76% chance that the Supreme Court will say that these tariffs are illegal under the present legal framework. In the event that the court rules against the tariffs, two big effects will be priced into the market right away. Refunds are the first one. It's possible that importers will need to be given back tariffs that have already been gathered. That means that money that has already gone into the government could go back out again. In terms of liquidity, that takes money out of the economy, which hurts the government's short-term finances. Markets usually don't like rapid changes in the budget, especially ones that come as a surprise. Second, there is the debt. It was thought that these tariffs would cut the U.S. debt by about $3 trillion over the next 10 years. If the decision goes against the tariffs, the reduction that was planned will not happen. That's a big number. That's a big change in how people think about the government's finances, and markets pay attention to that. Now, let's make this clearer. Even though Trump's tariffs were thrown out, that doesn't mean they will never be allowed again. In other words, it stops the current law system from being used to force them. There are still other legal ways for the president to put tariffs in place, but they work less quickly, are restricted, and are not as effective as the current system. This is where the doubt comes in. Worry is worse for the market than bad news. Tariffs may come back in the future, but they will do so through a different legal route. The transition time is confusing. They don't know how to plan. Traders don't know how to value risk. Traders also tend to lower their risk until things become clear again. According to reports, Trump has himself said that taxes are good for the economy and the stock market. In that light, the story will be less convincing if the court rules against the taxes. The move could be seen by the markets as taking away a support mechanism, even if that support is controversial. In the long run, getting rid of taxes could lower the government's income, lower inflation, and make it more likely that interest rates will be lowered. It has two sides then. In the short run, markets may not do well because of uncertainty and worries about the budget. Less inflation and looser monetary policy could be good for risk assets like crypto. In the long run, however, markets don't act based on long-term trends first. In the short run, they move based on fear, positioning, and reaction. This may help explain why XRP and the crypto market as a whole have been going down a little over the last few days. It's not fear selling, it's just repositioning carefully before making a big choice. The fact that the stock market doesn't seem too worried about it yet is interesting. The S&P 500 is still very close to its all-time highs. Stocks are doing well, which means that traditional markets are either sure of what will happen or haven't priced in the danger yet. Crypto, on the other hand, shows more feeling and acts more quickly. Cryptocurrencies tend to sell first and ask questions later when there is a lot of confusion. That doesn't mean something is wrong. Traders are just lowering their risk before a known event. Something else important we saw recently had to do with XRP ETFs. On January 7th, it was the first day since start that flowed red. It was the first net exit for U.S. spot XRP ETFs after 36 days of steady inflows. That is important, but don't get too upset about it. After a strong 4 to 5 day run-up, it's normal for people to start taking their money back. It's not always possible for money to move in one direction. Some managers let their gains run, rebalance their portfolios, or cut back on their exposure before big events. That doesn't mean the trend is wrong, it just stops it. If you look at the map, the red candle almost perfectly lines up with the records of outflow. It makes sense. We've seen red candles before, but this time the ETF data helps us understand the move. After a big rise, some money came out. It's also possible that the amount of money coming in and going out just slowed down, which can make price changes seem bigger when liquidity is low. Again, this is not an unusual thing to do, especially before big choices that affect a lot of people. Context is very important. There is more political unrest. A big Supreme Court decision is coming up soon. Crypto markets are lowering their risk a little while stocks stay calm. And there is the first ETF outflow after a long string of inflows. All of these things aren't terrible on their own, but when put together, they make it more likely that things will change quickly. That's why tomorrow is important. As for what the markets do with the Supreme Court's decision, it could lead to a comfort bounce, more consolidation, or another short-term drop. The response might not even happen right away. Markets will sometimes wait a few hours or even a day to fully understand what's going on. The most important thing is to stay calm and collected. Change is a part of the process. At times like these, weak hands are shaken out and strong positions are made. XRP is still in a zone that is important from a technical point of view. Long-term infrastructure keeps getting better, institutional goods are still around, and macro conditions are changing all the time. Keep in mind that many of the buyers who buy XRP ETFs come from the stock market. They have very different goals than crypto users who live in the same country. When it comes to the stock market, a huge win is when an asset goes up 15% or 20%. A lot of these investors are happy to take their gains at those marks. It makes sense for ETF users to start locking in gains when XRP goes up quickly, especially in a short amount of time. And that makes people want to sell, even if the long-term picture hasn't changed. This is something that we should always think about. Stopping to make money doesn't mean the trend is over. It only means that people are acting normally because that's how they're used to acting. Because of this, there is a very good chance that we will see a slowdown, but today's candle has already come back a little, which is good news. It tells us that people are still buying when prices drop. That's why it will be very interesting tomorrow. The market is going to decide soon if this move was just a fix or if it was something more. Once more, we come back to one of the most important ideas in trading and investments: not knowing. Uncertainty leads to sales. It's bad for markets to not know. Traders and investors try to lower their risk when they don't know what will happen, especially when it comes to big policy decisions like tariffs. It's something we've seen happen before in the past. Tariffs have caused a lot of trouble in the crypto market. Remember how the tariffs that China put in place on October 10th sent shockwaves through risky assets? Even before that, in April, March, and February, news stories about tariffs caused. That's why you need to be aware of tomorrow. It's not about guessing what will happen. It's about getting to know the surroundings. Volatility goes up when there is a lot of doubt. Even though that doesn't always mean prices fall, it can mean that moves happen faster and quicker than usual. Another interesting event that hasn't gotten much news yet is what President Trump said about the Federal Reserve not long ago. He told the New York Times that he already knows who will be the next head of the Fed. He hasn't told anyone the name or talked about it yet, but it looks like the choice has already been made. That sentence is very important. Who is he going to pick? That's the clear question. Also, how that person plans to handle monetary policy is very important. What I want to know is how aggressively they will cut interest rates. A very good thing could happen for high-risk markets if the next Fed chair is more dovish and willing to cut rates very quickly. Crypto is one of the riskiest types of assets, and it has generally done best when rates are going down and liquidity is rising. Now, just to be clear, this doesn't happen overnight. It could be 6 months or even a year before the new head of the Fed takes office. But the market doesn't wait for things to happen. They move on what you expect. If Trump names a new Fed chair and that person makes their position clear, especially if they say they want to lower rates, cut them faster, or make things easier for businesses, markets could start pricing that in right away. We might see a preemptive run based only on what people think will happen in the future. The market works that way. That's not how they act today. They act based on what they think will happen tomorrow. This is not advice about money. All of this makes sense when you think about why this moment is so important. You have pressure on ETFs to take profits. There is political conflict in the world. You aren't sure about the tariffs. You need to wait for a Supreme Court ruling. Now, there is talk about where the Federal Reserve might go in the future. There are a lot of things coming together at once. XRP is also hanging on to important technical zones. Infrastructure keeps getting better. Institutions can still get in through ETFs. It is still possible to liquidate. Prices have already shown they can rise after short-term drops. This is what a time of change looks like. There is no euphoria. And it's not fear. It's careful. This is reacting. It also looks to the future. There's no promise that there will be a big move up or down tomorrow. What it does promise is more details. And knowing more makes things less unclear. Once there is less doubt, markets tend to go in a certain way. The important thing is to stay disciplined no matter what way it is going in, a continuation, consolidation, or a deeper pullback. When things are this rough, people get shook up right before the next move by playing on their emotions. Take a step back, not just the news itself, but also how prices change after it comes out. Watch the volume, check the levels. Most importantly, keep an eye on how people feel. We feel different before the price does because of this. We'll see how the market handles this. To put it mildly, it's going to be very interesting. If this breakdown helped you, don't forget to hit the like button and subscribe to the video. Glad you watched, and I'll see you next time.